Join us as we disrupt the global real estate industry, revolutionizing the future of property investment and ownership.
The world has changed. Future without boundaries is just around the corner. The way we live today can become obsolete tomorrow. A whole new dimension driven by the evolution of AI and virtual reality. Are you ready for the inevitable?
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together there is no stopping us.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone past midday here, making it the same time in UTC. How is everybody doing today? Brilliant to see so many of you in the chat. And everybody, obviously, that's tuning into this live, you get a big shout out this morning, or this afternoon even. And also for everybody that is watching this on catch up. Erica, there she is. Never late. We're only joking, Erica. Brilliant to see you all. Today, I want to kind of continue with our theme of really crushing through some charts. Yeah, I think, look, the education side hopefully is valuable for you guys, right? But at the same time, I appreciate you all have a lot of assets and bits and pieces you've got your eyes on and want to know what kind of thoughts that, you know, someone like myself might have, and also to kind of share your thoughts. So I thought we'd continue with that. As it went really, really well on Monday. Obviously, this is typically our alt request day as well, so we need to factor that in. So if you've got anything, guys, let's sit down and we can work through these as we go. Just going to start with the ETH chart up there, make the screen big, and just check the chat. Good morning, good morning, good morning. A few shout outs to people in here as well. Hans, first in today, absolutely ripped it. Nick really lost his touch this week, hasn't he? Trader Mum Joe, Gio, brilliant to see you. Erica, great to see you. Julian, hello, mate. Simon as well. Steve Etienne, our good friend. Chris Burston as well. Good morning, mate. Great to have you on here. Projal as well. Brilliant to see you again. Hemsworth Steak Wine. That is a fantastic name. That is. Hemsworth seems like a really decent chap, and I love steak and wine, so it's a big win for me on that name. Yeah, sure, mate. Why not? In fact, let's just jump straight into it, shall we? I think we had this on our horizon the other day, didn't we, as well? Let's take a look. Also, guys, when we're looking at these things, if there's an asset that you particularly want to see, please don't hesitate to speak up. Also, in the same vein, if there's something about it or a time frame you want me to cover, let's take a look. The other thing that I want to kind of work on a bit better from my end, being a bit better with you guys, is sort of looking at our ranges and stuff as well, and key levels. I appreciate not everybody kind of, you know, trades the gaps and the reversals and kind of intraday liquidity like me. And I really want this to be kind of all inclusive for everyone. So I think that's what we're going to look at a little bit more. So I'm just going to drop down onto the 4 hour very quickly, because I think that's where we had the majority of our analysis here. So when did we cover this last? There we go. It was on Monday. So let's see what Monday told us, shall we? So let's just clear a few of these bits up. We can bring these up in a second because these are from a lower time frame, as is this one. So the plan here was pretty simple, actually. We were looking here. Ever in Bermuda, mate. I need very few excuses to go somewhere like Bermuda, I tell you that. Nick, hello, mate. Welcome. Great to have you in here, buddy, as always. And yeah, absolutely, mate. You can guarantee that. Ping me out on Twitter. I will absolutely get to Bermuda one day. A good friend of mine actually is Bermuda native and has wanted to go back for some time, so it sounds like a treat. Now, before I ramble on too much, our TA on this on Monday was based very much on the 4 hour chart. So as we're looking at here, we're looking for price to be attacking liquidity, right? Above old highs or old lows. So we've marked out the key ones that we had here on our 4 hour chart, and also our gaps. Yeah, so this is a fair value gap, which you'll see on here normally. I've been a bit lazy with this one, but FVGH4, okay? Fair value gap, 4 hour. Now, the key for me here is that when we go up and we run some form of external liquidity, which are our old highs or lows, then we look for price to come down and rebalance a gap. Yeah, if we don't have a gap in here, then we can look to order blocks. But typically, I do favor gaps. Now, the reason that we've got this green arrow on here, which will probably look a little bit less terrible when we go onto the lower time frame to look for execution, is that while we're delivering from this, right, which is a bullish fair value gap, right, because it's from bullish candles, right? We've got the bullish gap in an uptrend, yeah, meaning we're delivering bullish price action, right? The gaps that we have in a downtrend, like this one, for example, or our down close candles, are bearish gaps, right? So let me, just for the sake of anybody that's maybe a bit new here, we'll do the bullish ones in green, we'll do the bearish ones in red, yeah? So we can see here how price, doesn't have to follow an exact plan, right? We can't ever tell exactly what price is going to do. What we can do, or how I like to look at it, is I want to try and work out what the major players are doing, the major investors, and then try and jump on and grab a slice of that trend, okay? So I want to get in at a stage down here whereby it makes sense for me, yeah, because I'm getting in with a good risk to reward. And there's a few different ways we can do this. We can do this using our premium and discount, okay? So this is just simply what we're taking what we would call our dealing range, which is from this low, because that's the last swing low, to this swing high, which is the swing high, right? And that then all we've got there is a Fibonacci that's just got a 0, a 0.5, and a 1 on it, all right? The reason for that is that we favor long setups from the bottom 50% and favor short setups from the upper 50%. What you'll notice here is as price dipped down into the lower 50%, it gave us a good buying opportunity within our fair value gap. I always want to overlay either a fair value gap or the sweep of a low or a sweep of a high to show that we're delivering from somewhere, yeah, where we expect, in this case, bullish price action to develop. So bullish fair value gap down in the bottom 50% of our dealing range, right, which is our premium discount. For anybody that wants to know more about that, always happy to teach how I interpret and how I use it, but these are ICT concepts. You can find his information on YouTube, okay? And as we come down into here, we get this reaction. So that's what we were looking to play. Ultimately, notice how when we set this bearish fair value gap, yeah, within this same dealing range, we're actually here as well. And even if we were to draw another one for a smaller dealing range here, yeah, you see we got the fair value gap in here as well. Now, focusing on this, because this dealing range is still within this one. So I personally always give more weight to this. When we break out of this, then I would look to create another dealing range from this high to this low, okay? So I'm just going to hide that for a moment. And what we're now going to do is just take a look at how this price action develops in here and how we could have got involved in it. Ultimately, I was targeting this high here, okay? But we didn't get it. No problem, right? What we want to do is we want to grab enough of this, move our stops to entry at a point that we can kind of control the play, limit our risk or mitigate our risk. And then from there, we can kind of decant down and look if the market's giving us any indication of reversal. So let's look at the two plays that we had, right? We can see as price came into here, how it's balanced this. Now, as we move down through the time frames, and I always like checking the hourly, right? For a few different reasons. For the way that I typically trade, like I trade a lot of inversion setups, for example. So something like this would be quite key for me because that's a bearish fair value gap. Yeah. So we should be expecting rejection here. When we get a strong close above it, it means that we can then look left and say, okay, well, where could price be chasing for, right? Ultimately, I would have been looking at this. You can see we didn't quite get there. We would have obviously made an allowance for this gap as well. And we can just see how unclean the price delivery is here, okay? Now, one thing that I would say is if you're using a 4 hour as your high time frame, as we've done so here, then really the time frame that I like moving down to the next is the 15-minute. Yeah, and then I would look to execute on the minute charts for that in terms of finding a setup. So with that in mind, as we've come down into here, I would be looking to trade this within my kill zones. Okay, you can see them marked on the chart here. For anybody that wants to use them, really, really good indicator for this. I have no association with this gentleman at all, but is kill zones by somebody called Josh Triple U. Okay, makes a really, really good kill zone indicator. It just highlights the high volume and predicted volatility. So we trade particular times. For me, I focus very heavily, especially on cryptocurrency, in the New York AM session. Yeah. And the New York PM session. So what we're doing is we're looking here, and this here as well, right? These blue dots are from another indicator that I have. Now, for ICT purists out there as well, they are talking about slightly shorter session. I actually trade this an hour longer on crypto and sometimes with equities as well, but very much constrict it more in traditional markets, unless I really get what I would call an A+ setup. Now, the red box that you see here represents Asia's range, okay? Now, when we get a sweep of Asia's range, which is a key liquidity pool, and you'll notice if you look back on charts how often Asia consolidates, then what we're looking for here is we've dipped below this, yeah, taken that liquidity, and look how our price starts to consolidate here. We get a very small run on this low here, and then we really take off. So within our trading session here, within these blue dots, is where we'd be looking for our long setups, okay? I'm not going to go too much into detail on trigger mechanisms and that today, purely because I want to cover a lot of charts for you guys, but also because I've covered it on a lot of other sessions. But if that is something you're interested in, do let me know. And then next week we can really, really kind of drop into it. But what I would say is, if you're looking for something quite repeatable, then a good way to look at it, if you have let's just use this line here, yeah? So if we're using this as our typical kind of idea of support or resistance, or say this is the prior day's low or the low of day, then really what you want to see is something like this, where price sweeps that low, recovers it quite well, right? Within this impulse move higher, you want it to show displacement, right? So what does that mean? Let me just mark this. So that's our sweep of the low. Yeah, that's our market structure shift, where price action is then shifting from bearish delivery, lower lows and lower highs, to setting its first higher high. We want to see a strong move here with high-bodied candles showing us volume in the delivery, right? Conviction from buyers. Then we can target a gap that exists in here for price to retrace to and then take off. Why is that a good system? Because you typically get a good entry. You know exactly where your risk is. You know where your point of invalidation is. And then you can move your stops to a clear and obvious target. And if you had, say, another high in here, then you can look to mitigate that risk even further by just simply moving your stop to entry when you get to a key point, all right? So like I say, I'm going to rip through these charts a little bit quicker today, just so that we get a bit more of an overview of different assets. So this is where we were. This is what our thinking was. Price to have a reaction in here. We saw we got that reaction. Price ultimately didn't make it to our overall target at the top. That can be for a number of reasons. But I think we can all see that whatever our trigger mechanism is here, even if it was we were looking at a market structure break with displacement, that, you know, we would have had a really nice trade out of this. And that's why we can just target, as I covered on the last show, these intermediate term highs, right? These are the highs that exist within fair value gaps, or the lows that exist within fair value gaps, right? So just to zoom in for you a little bit, you see that this high here is within this gap, yeah? These can often form really good liquidity pools, okay? Same as equal highs and equal lows. So when we get to a position like that, which we did at 1.64R or 1.6R, then we can move our stop loss to entry. You can trim a bit of profit on the trade depending on what your strategy is. And from there, it allows you to trade in a little bit more of a risk-averse manner, okay? So let's just take a quick look at the questions. Hey, Whack, how you doing? 9-year-old who wants to see price ping pong. Your little 9-year-old sounds like such a legend. Yeah, I mean, well, I think you've got a good range trader in the making there, mate. And actually, when I zoom out on this, I just want to show you everybody how we can look at this as a range as well, in terms of using our inside bar patterns, which I know we haven't covered for a while. Simon, yeah, absolutely. Remind me towards the end, mate. We'll definitely cover Bitcoin today as well. Good morning, Tammy. Great to see you on the Sheen as well. And Taron Feathers, great to have you here as well, buddy. So just want to show you that one. Now, the next point of it is in here, right? This was our bearish fair value gap from our 4 hour, yeah? So again, we notice how when price delivers from here, yeah, you see as you kind of get this strong reaction here. See, you get this kind of V shape, right? Price up and price down, yeah? You can see that quite clearly, that nice kind of V shape. Let me just make that a bit bigger, and we'll also make that red, yeah? So up, barely touches it and pings away, which is slightly different to what we get in here, yeah? Because price kind of comes into here and then just kind of consolidates a little while, yeah? So actually, some of the very best setups that you're going to see using these points of interest, like your fair value gaps, are when price drives into a level and has quite a quick reaction away from it. Yeah, it's getting that point of rejection. See the way that we came above this level? Yeah, when we set this higher, we can see quite clearly here how price came up and then shot away straight away. Exactly. And what our friend Harms is referring to here is our power of 3, which is where we're looking for consolidation, manipulation, yeah, and then ultimately expansion. Okay, so that's when we're looking for price to consolidate within a range, form a range, run the lows of that range before recovering it to the highs, or vice versa. So considering all of that, which is great, let's zoom out now because I want to go on to our daily and look at where our range is sitting. All right, so let's just grab those bits, stick them into there, create a group of drawings. What were we on Monday, 28th? No, 29th, weren't we? Let's have a look. 29th of the 1st. So we can keep that. So I like doing it on the live shows because that way we can always look back with interest with some of the TA we put on here. So one of the things that I really like to trade are inside bar patterns. Okay. Now, for anybody that doesn't know what they are, you can go onto my Twitter account. There's a pinned message at the top. This for me was my absolute bread and butter on my path to becoming a professional trader. Right. And you know, however you consider a professional trader, for me, it's been a lot of years that my sole income has come from trading. Okay. So when I made that step up, this is what really, really helped me to do this, because this is something that gave me consistency where before I had inconsistency. Okay. So I'm going to cover what an inside bar range is. An inside bar consists of 2 candles, right? A mother bar, which is this candle here, and an inside bar, which is the following candle. Now, these have to meet a set of parameters, okay? This first candle, yeah, the second candle, when this closes, the high and low of this candle must be within this candle's high and low, within this candle's range, okay? Then what we do is we mark out the high of that, which I just do in a thinner line, and this becomes our inside bar, yeah, the namesake of the pattern. So this becomes our mother bar range, the high to low, and this becomes our inside bar range. Now I'm going to move just to a slightly smaller time frame now. All right, let's go say to the hourly. So we can see how price reacts to these levels. Now, what we're looking to do here, and actually, just so it's a bit clearer for you guys, let's make these even fatter, because the inside bar looks a little bit skinny there. So while we're within the confines of this range, what we're looking for, quite simply, and you'll hear a lot of SC in this, hopefully it'd be a great compliment to me if you do, but nobody says it like him. Yeah, what you're looking for here are deviations for a price to climb back in the range. Yeah, and then what we're doing at that point is we're trading first of all to a midline, which we're going to draw in a moment. And then if we break below that midline and hold, we're then trading it to the range lows. All right. Now, my good friend Trader Dank tells a story about Johnny and the pizza, which I'll leave for you to find out directly from him. But it's a brilliant story based on ranges that really kind of hit home with me. Projel, yeah, Trader Exo. So a very, very famous student of Trader SC and a wonderful, wonderful trader as well. Same as Trader Dank. We're all kind of from the same school of being very fortunate enough to learn under that great man. And Exo and Dank even closer than I did. But fantastic traders you should definitely check out. And all range traders. And that's really how I kind of made my way in the industry with this as well. You know, these principles are all very similar. What you're looking for key levels where price can have a reaction. What you want to see from price is whether it's willing to respect that level, in which case are you then heading lower, or whether it's tapping into that level, quickly recovering it, like with a range. And if it's back within the range, you've got to ask yourself this question, right? And the question is, if price is really bullish here, yeah, then when we got to here, you expect to see continuation, okay? That's just simply because if the buyers are there, then there really shouldn't be a reason for price to really have a big corrective move and then do something like that, right? So what we tend to see is if price does something like this, comes out from range and quickly steps back in, then we assume that price is showing weakness and we can trade that lower. One of the great things about trading systems like this, and I'll just show you in a slightly more obvious area like that, right, is when we have this run of a high, I like to see a couple of things, right? I like to see price sweep a high, a local high, as we see here, yeah? Then when we shift structure, so as we've come up to here, yeah? Now, so we've swept that high. Now, if we expect continuation from here, it's really simple. We expect price to get back above this level, right? If it doesn't, what we get here is we set a lower high. When we break that, which we can see we do here, so we set high, higher low, higher high, higher low, lower high, which is our first indication of weakness, but we only know that when price breaks this level, right? Deviation. My boy, Mr. Eames, here he is. Exactly right, my friend. It's exactly what it is. This then becomes a deviation, and our expectation is that if price steps back in here, that we're going to move down to our next key liquidity target, right? So it's quite a simple principle. And the great thing about it is you can do it on a number of different time frames. I do recommend doing it on the upper time frames. And actually, if you look at something like this, right, and Hans is kind of alluding to this now, which is what we'll look at in a second, is even with a coin that has a really short trading history like this, you can kind of see its key levels, yeah? And while this might not look crazy clean to you at the moment, you'll come to a way where you'll kind of really learn to embrace this, all right? So we're just taking higher time frame, and then we're decanting onto a lower time frame, exactly as I do with my intraday system as well, except something like this can work, obviously, on a higher time frame, which I know a lot of you guys are much more in terms of like position trading, etc. So, for example, if we're looking at these and we want to overlay these, and maybe you're somebody that doesn't want to apply kill zones as well, which is no problem at all. I don't want to be like exclusive to anyone. I want to be inclusive for everyone, right? But even if we're just taking these as days, we're just looking at how price reacts at these levels, okay? So remember, like I said to you about these kind of recoveries, yeah, see how price quickly jabs above that and then quickly gets back below. Yeah, they're the kind of moves that we can see, that we can then step into a chart and say to ourselves, okay, well, what do we then want to see? Well, we want to see a structure break. Right, and then we just want a nice clean liquidity target down here. And look, we've got liquidity resting below these lows here. All we need to do is just adjust our risk position here, right? And what we'll notice is that we don't come back to take that. And then we can afford to hold this lower, right? The other thing that we can do is obviously we can split these ranges. Okay, so if I did that with one of these, we can see how that becomes the midline of that range, which will leave that just in orange. And then our master range here, or our mother bar range, we can put another line in here. And what we're ultimately doing, yeah, is we're looking at how price reacts at these different levels. These kind of overlay one another. So we can see here, for example, as price comes into this level, it's really struggling to get back above it, right? Notice what it does. Yeah, comes into it, finds support. Look at the long downside wicks, right? We then get a deviation, price drops down below. Then we start finding resistance here. You can also then just overlay that with what I would traditionally be teaching, which are things like our fair value gaps. And you can start to kind of paint a picture in your head about how price is kind of rejecting this level, yeah? Then all we need to do is be sellers here. We need to move our stops at a sensible point, and then ultimately we don't get this all the way down to the lows, right? But if we were looking at a range like this, where we've got our inside bar low down to the mother bar low, yeah, you can even do the same with an area like this, right? And you can say, okay, well, if this is a range, I'm thinking of it like I would think about it in terms of a computer, right? Or an algorithm or a trading system, a bot. And then you can see how you kind of get these levels. Look how beautiful they are, right? You'll notice how clean they are very often, because if you're thinking like a machine in this respect, certainly how I've always thought of it, I think most of these positions and trading is done by algorithms and, you know, bots and very, very smart computers, is look, you get the price there. Now, if price wants to break down and hold here, remember what we said, we've got our fair value gap here. So we would expect this to reject price and price to go down. So even if that was our expectation, we got in early, yeah, we get our stop loss taken here, but ultimately, what does it do? It gives us a key indication that if we now break back above this with strength, as we've done, there's our bullish fair value gap. That's where we're a buyer. That's where our risk exists. and here are our targets. First target, we reclaim and hold this target, then we go to the next level. We get above and hold the next level, we trade it to the next level. And that's what you'll hear from these great traders, people like Trader SC, people like Dank and Exo, and that when they're talking about trading level to level. All right. So does that make sense, guys? Have I gone through that a bit quickly? Is that a bit convoluted? Let me just run back through a few questions that we've got on here. Hans, hi BC. I know ONDO is a new coin, but if you look at an older coin like Link, what bars do you choose on the daily? That is brilliant, because this Eric is going to hit the roof when I say this. I go for recency, right? So let's just quickly take a look. You know what? Let's take a look at Bitcoin, right? I think it was Simon earlier says that, looking at Bitcoin. So let's take a look at this. We can always come back from this. I think this was maybe 29th as well, wasn't it? Let's just pop this on here just so we've got it if we want to refer back to it. I think I'll take you up on that, Stevie boy, although I think you massively underestimate the waves that you can make in the market as well, my friend. It is, I'm sure you won't need to be anybody's tea butler, that's for sure. So, okay, we've just got our weekly time frame on there as well. I think H4 and daily, let's get rid of those. Completely clean chart. Used to love watching SC do this years and years ago when it was on like MetaTrader. And every line that you'd open or close would go like kadunk, shh, kadunk, except it didn't have one of those like auto functions to level it. So you used to have to spend ages just trying to get it right. Always a good throwback for us boomers, right? So here we are on Bitcoin, and we all know we have an absolute ton of data on Bitcoin, right? So what Hans is saying is, where do we start on this? Hey, Razor, you legend. Hang on. Oh, shit. I think Razor was supposed to be coming on the live show today, wouldn't you? Razor, grab yourself the StreamYard link, mate, and come and say hello. You can teach us all about volume. Where is he? Is he still with us? Club recency. Love that. Absolutely love that. Yeah, so the reason that I say with that, and it is really, really funny because I do obviously get a good sound ripping for that. Hang on, let me just shill a link over to Razor quickly. He's going to jump on with us and share with us some wisdom for the last half of the show. Let's have a look. YOLO. Yeah, Esan, that's a really good point from Hans. Yeah, it is. It's not a signals channel, mate, and it's very, very dangerous to have that. I mean, unless you've got a proven, professional trading team like we have over at the Nest, the one especially, that, and there are others out there as well, but obviously I recommend ourselves. Then you can get signals from that, right? You can get it for free by signing up with a referral link, which you can find in the description, or just let me know and I'll give it to you. But what I would say, and I say it to everybody, our mission here is to not have people that are reliant on signals, right? It's all about learning this for yourself. And I know a lot of the OGs will be tired of me saying this, but there is a good saying: you can give a person a fish and feed them for a day. You can teach a person to fish and they can feed themselves for a lifetime. So definitely, have a focus on that, my friend, and always happy to help you on these shows. Right, Razor, I'm just going to fire this over on Discord, mate. You should just be able to join on that, I think, buddy. I'm just going to shut the thingy down, otherwise it's just going to bleep off like crazy. Right, so what I'm covering here at the moment are inside bar ranges, and actually with Razor coming on the show as well, which is an absolute treat, we are going to get a really, really big insight into his trading and how he trades ranges, because he trades ranges exceptionally well, and also is somebody that FOMC says, yeah, it is indeed, my friend. As we released this morning, we have got FOMC coming in tonight, so expect volatility. Now, when you're looking to pick a range, and I'm focusing this obviously on inside bars, right? Now, the first thing I'm doing is I'm looking to see if there's anything stand out, right? Now, I'm not going to get a range when price is expanding. But what we notice, right, is that, and this is even on a weekly, yeah? What happens here? we get an expansion. Oh, it would do if I'd done that rather than adding a text box there. Here we go. So what we notice here is we get an expansion, lower, yeah, distribution. Then we get consolidation, right? Then we get expansion again, distribution again. Then we go into this really nice period of consolidation, right? Not really much. You know, what you've got in here are like little kind of more kind of micro moves, right? On a weekly scale, obviously, it's all very dependent on that, okay? But even here, you can see when you get these pumps, you get these consolidations before price moves again, right? Think of it as the market making up its mind, right? Before it makes its decision. So, yeah, exactly. So, like Hans says here, Dynaway, you've got to be careful on FOMC days. The reason that we're extra cautious on those is because you often see these big scam wicks that basically are designed to just take out over-leveraged traders both sides of the market, okay? And actually, like these outside days, see this one? So you come out, you've taken all liquidity above these highs, liquidity below these lows, and then price has a big run on the highs here before a corrective move lower. So if we're picking out our ranges, right, then let's just take a look at this. What we've got is an expansion higher, right? Then all I'm doing is after an expansion move, I'm then just looking to see if we set an inside bar. So here we are on the weekly, right? So once this candle closes here, we set our inside bar pattern, right? Here's our high, here's our low, mother bar, yeah? And then our inside bar is this one. And it's important that we allow for the wicks, all right, guys? Actually, yeah, let me make these ones bigger again, just so it doesn't look too small if anybody's watching this on their phone. There we go. So does that make sense to everyone, right? What we're doing is and how we're putting them in. Hey, Razor in the house. How you doing, brother?
What's up, man? Can you hear me?
Yeah,
So
man.
let me
I've got you large and in charge. Can everybody else hear
Any
me?
better?
Can you not hear me?
No, it's fine. I can hear you. Everything.
Awesome. Awesome. Welcome to the stream,
Yeah.
brother. Look, I'm really keen to get your thoughts on this, actually, so I'm really glad you reminded me. Awesome. Hey, there we go. Now see, where was this reaction, guys? Where was this response when it was just me, huh? Now you're all getting excited because Razor's in here, right? See, that's favoritism. Right, Raz, let me just tell them.
I'm usually the boring one, man.
Yeah, but that's why we compliment each other so well, Razor, because you're really smart. And
So you think you're the funny guy, right?
Yeah, exactly. I'm the funny, stupid one, right? And you're the bright, quiet one. So we have that really nice kind of synergy between us. Yeah,
I hope so.
So I'm going to give my thoughts on this range. I'm looking at Bitcoin on a weekly. Yeah,
bull flag. It's a bull flag.
Yeah, exactly. We've got a bull flag going on, or if we look at it as a range, kind of a really flat bull flag, right? But mother bar high, mother bar low, inside bar high and low, right? So mother bar candle has to have a closed, smaller candle from high to low within it. Now, to answer the question that was asked earlier in terms of how we favor ranges, we will notice, how we get this high and this high from our another mother bar, right? And that we've got an inside bar after it. So we claim another one. However, because it's in the range of an existing inside bar pattern, I always keep this one, right? So if we had broken out of this and had another expansion, then I would look to make another one. However, if we now drop this down to the daily, we can see how price reacts at these levels, okay? So here, deviation, right? So deviation above the high, price comes in, finds support at the midline, right? The equilibrium, which let me draw that in for you rather than, there we go.
Nice.
Beautiful, right? So we get the deviation, price comes in, finds support here. Look at the downside wicks, right? We're getting absorption as we go into this level. So then price runs higher. Again, look how we get this aggressive recovery. We're back in the range here, meaning we can trade it down here. It doesn't quite get the range low, but again, it gets rejected at the midline. So as long as we know how to set our ranges, they're really, really powerful tools for us to kind of learn where liquidity is. And actually, this is a really good example over here, right? We have this strong move back into the range. Now, let's say we didn't catch this move in, right? Just happened too quick. Well, then we're looking here at the consolidation around this level. Again, remember what we want to see is price comes into here and refuses to go lower. See how quite quickly it recovers, yeah? And what we're seeing here is this close below, price starts to stick. But then even if we're waiting for this close below the midline here, we then know where our next liquidity is, meaning that on a lower time frame, if we just put a line here, if we go down to say something like an hourly, right, we can see here how if we're just patient, right, price comes down to this level. Look how it's coming back up here, right? If we want to short, or if I'm looking to short an asset, what I want to see is I want to see price come up to give me a good entry before then looking to short it lower, okay? And I know you guys will probably use something more like a 15-minute or a 5-minute, but if we're looking for this type of trigger, yeah, then quite simply overlaying what we've been discussing in the past weeks, we want a key liquidity pool. In this case is the high of day. Yeah, so you see that on my charts of HOD. Price comes up, runs this liquidity, yeah, and then breaks down. That means if we're a seller within here and, said we're not going to look into triggers, but even if we take a worst case entry of down here, we've got a clear point of validation, this clear swing higher, right? And then we have a nice clear target down here. However, we also, as I said, want to make sure that we're mitigating our risk here. And we have the low of day here and the prior day's low here. So once we can identify these key liquidity pools, allows us to move our stop loss to entry. We still get over 1R on that trade, meaning that if we don't run all the way down to there, we can book some profit, get ourselves out of the trade and live to fight another day. So with that in mind, what I would love to do right now, Raz, if you're up for it, my friend, is get you to add your Bitcoin weekly to the chart. Yeah. And see how you would kind of trade this, or to just on any time frame share with our wonderful viewers here how you would kind of look to set your ranges and then what your kind of mechanism is to trade them.
Yeah. So, okay. So let me actually add it.
Here we
Okay.
go.
So share. No. How can I share?
You might need to hang on. Do you need to give it to me?
No. Wait. I think it's.
Hey, there you go.
Yes, let's go. Okay. So, I mean, in terms of the weekly, we had a live stream on Discord, I think last week or like 2 weeks ago, and I talked about the pattern that I found on Bitcoin chart. No, not this one. Yeah, this would work. Okay, so if you put it on log scale, okay, which I like to do. I generally don't like log scale, but on Bitcoin chart you have to, right? And you draw your fib pool, okay, and like we know that Bitcoin loves the golden pocket, right? And you can see the reaction there, right? The pattern this is the bull market high, this is the low of the bull market, and we get this rally to the golden pocket, and then the the Corona dump, black swan, right? So if we do the same thing, this is the bull market all-time high, this is the low for now. You see this the exact same thing is repeating, kind of. I mean, I don't like to say that the fractals work, but I mean, so far
we do see it often though, don't we, with fractal patterns, right? But do you feel like sometimes it's what we would call like a self-fulfilling prophecy, that if so many people believe it, the market can almost kind of become in tune to that?
But look, there's a lot more to it. Actually, we discussed it like for like 40 minutes, I think. So this is the high, okay, after the first dump in the last bull market, okay. So this is the dump, this is the first high after the all-time high, right? The relief rally. And the same thing, this is the dump, This is the first high after the dump. Okay, you see the rate there, right? The liquidity grab right there.
It's quite a strong
Okay.
reaction as well, isn't it?
Yes. So actually, there's a lot more. Also, percentage wise, you can just measure the prices and you get, but that's not the point, right? I just wanted to mention that. I just wanted to mention that this here like this range of 50, around 50 is a very strong resistance area, right?
It
This
is,
is,
and it's also a round
yeah.
number, right? You know.
Oh yeah. I mean, why not? Bitcoin was like 15K at the beginning of the year. I mean, everyone just wants to sell at 50, I would say.
Uh-huh.
But yeah, if you just zoom in, I mean, enough for the fractals, right? I don't want to really pay attention to it myself. I just want to trade what I can see. And so far, what I can see is that this high right here is very important for us. Why? I just mentioned, right? This is the first high after the all-time high. Okay, so the relief rally, the retrace after the high, right?
And it makes sense that there's a lot of liquidity resting above there, right?
Of
People
course.
that were shorting there, you can see it.
Oh yeah. So and we're getting a lot of confluence as well. Like we have the bearish engulfing candle here.
Yeah, almost like a big pin bar as well, isn't it? Like
Oh
a
yeah.
massive wick on it.
Yeah, but hey, right now, if you ask me about the weekly, about the daily structure, I would say it's bullish. It's not like something that I would short right exactly here. Okay, sure, we have the break of a structure. The structure is kind of turning bullish. Okay, but I think you know what I do, right? So since we gained this range right here, okay, that's all I need in short term to
Yep.
to get bullish, right? Since we regain this level, I'm bullish for now. And in terms of targets, because that's a very interesting thing about this range, right? I think you also mentioned that if I were to like draw the range, right? The So this is our range right here. Okay. One fun thing about this range is that we haven't really get the retrace at any of extremes after the deviations, right? This is the deviation to the downside. No retrace, no retest. And this is the deviation to the upside. Again, no retrace. Okay.
Even on that little deviation before, right? Price just ripped straight down almost to the bottom, right? You know, that first kind of little poke above there. Yeah, just ripped straight down and then recovered the midline, then came back up for a second deviation to really trap people. And then
Yeah. A very tricky one, I would say. This range is not is not built for the beginners, I would say.
Yeah. It's not, but you can still see it though, right? When you look at it, and what Razuna's done there, I don't know if this is how you draw your ranges typically, Razor, but I would call that like an impulse range, where if I'm looking for a big impulse move higher, I'm looking to take the high and then the first set low where we see a reaction back to the midline, and then that kind of job. So like you had it drawn out at first, so you'd kind of go from.
Oh yeah, no. I always draw it like this because as you said, the first impulse is important for me. That's the impulse that actually generated the range, right? And I mean, like I think, and all our members know, I just love to add the volume profile to my range.
Yeah, I'd love to do a little bit more about this actually, Razor, because that's something that I don't do. And I do get a few questions from members and also from people here in the public chat as well, about how you can kind of use it, like the central and the point of control. How do you use that as kind of like a magnet, like a mean reversion type tool that price typically snaps back to that?
Yes. So I mean, this is kind of my thing about the ranges and the volume profile, right? I don't really, I haven't really seen anybody talking it, I mean, using it like this. Okay. But generally, so since we're trading the ranges, right? I have my I always mark my price action range, right?
Mhm.
Like this. And then when I mark the deviations because we want to buy at discount and sell at the overbought regions, right?
Mhm.
So this is the deviation. That's why actually the deviations are important for us. Okay, and when we add the volume profile, okay, you see that we're getting a volume range now.
Mhm.
Okay,
Very
this
similar to the
value
actual price
area.
action range, though.
Yes, and the high probability trades come in when you get a deviation out of your price action range and your volume range,
Mhm.
or your aka like the value area, so something
Mhm.
like this. Okay, and what I generally want to trade is when I get the deviation out of my price action range
Mhm.
and the volume profile, when I get the acceptance into the value area. Okay, now this area right here is the most important long entry region for me.
Hmm.
Okay,
Okay.
that's so I kind of doubled the probability of my trade. I mean, don't really I mean, the double
Don't quote me
is
on that
made
yet.
up, but yeah, I mean, so you can see right here. Okay, I mean, this is what I mean, we can trade in terms of the price action range, right?
Mhm.
If you want. But this one right here is the one that I get, and sure, I get the risk reward is not the best, and the invalidation is just the close below the price action range, right?
Mhm.
It's not the best one, okay, but you usually get so you actually get more confidence getting into these trades, okay.
Mhm.
And yeah, this is just talking about the range and the strategy that I use when it comes to range trading. If you check my channel on Discord, I shared a lot of setups like this. Okay,
Mhm. And then actually,
but
like your take profit as well, Razor. Like because I mean,
oh yeah.
what you do so well with your ranges is you'll
Mhm.
notice if you remember at the Bird Nest with the calls, you'll see Razor's trades pretty much like he's saying because of that extra layer of confluence has a higher success rate in terms of its trading. So while you're risking a little bit of your risk to reward, I personally like building systems like that, right? Because I like to have a higher win rate, and I'm happy to accept a lower R because I realise that mentally I like to see that someone like Bird, for example, who can be crazy profitable with a system that wins like 32% of the time or something, just beats me up. I just don't like, it sounds like a bad thing to say, and you'll hear people say this is, a bad trade, but I just don't like being like taking that many losses, right? I think
Yeah.
psychologically, I don't like kind of leading that. But what Raz does really well is when you seem to secure that first take profit, yeah, you've got a good level, a good return, and then you're in a position whereby you can move your stops up if you want to, right? To limit if there's any kind of, crazy volatility comes into the market or we get a news event or whatever that causes a dump. You're someone like me that likes to secure those profits, right?
Mhm. Yeah, of course. So in terms of what you said, yeah, I mean, I mean that's what we're here. In my opinion, the strategies that have like low what do you call the win rate, right? With low
Mhm.
win rates are not designed for like people like me and you.
No.
They're designed for the bots, right? That
Yeah.
they
And
don't.
nice, calm people like Burb, right? Who's
Yes.
very level, very chill, just gets on with it, accepts it.
Oh yeah, but yeah, I mean, this is just what I'm trading lately. I added the volume profile to get that extra confluence, and the volume is what riding the market, especially the crypto market, right?
Mhm.
The volume is just the thing that's very important for us, if you ask me. And in terms of the what you asked, the targets, okay. This range right here is not the best example, to be honest.
Mhm.
Okay, it's not the best example because we don't get. I'm not sure if I myself could like take this trade. Okay, but
Mhm.
usually if I'm very aggressive, I just target the other extreme of the price action range that I got.
Mhm.
This one. Okay, this is my price action range, and this is the volume range. Okay,
Mhm.
I hope people actually can realize what I'm referring to.
Yeah, I
Really.
know. I think it's quite clear. But guys, just in case you are a little bit lost on this, then basically what you notice is the thicker lines are the price action range, meaning they've been taken purely from the price action, right? Where you see Razun has added the volume profile on there, the thick like orange line in the middle is the point of control, and above
This
and
one,
below it exactly are two thin kind of grey lines, which makes up like the volume range, basically the value
yes,
area they call it.
yes,
And now normally I'm guessing with this, you like to see it where the value area, highs and lows are a little bit closer to maybe the price action range, right? So it gives you a little bit more of an area to kind of maybe move your stops up if you wanted to. Where with this one, for example, it's, on that bottom line, there's a fair distance between the value area low and then the range low.
yeah, this one, yeah, yes, exactly, mate. Thank you. So generally, what I like to trade is I get the entry around here, okay, around the value area. I mean, it depends on the price action. I won't execute this trade on 12-hour or daily, right? I
Mm-hmm.
zoom in on lower time frames to get more data. Okay, sometimes I get a better entry like this, sometimes I just don't. Okay, but
Mm-hmm.
this is what I'm referring to in terms of entry. And my first take profit area is generally around the point of control, which
Nice.
you like, usually you get it in at the same region as the a median line of the price action range, right?
Mm-hmm.
Like
And that
here.
one would be like, you'd still be claiming like a 1.5R or something for that setup, right? And
Yes, something around. I'm not really obsessed with the 1.5. It's but
Mhm.
generally when it's above 1, I'm happy with it.
Yeah, and that's because with your trades being on the slightly higher time frame, you've got really you have low like margin, right? A low position size. Where for me, trading this on say like a 1 or a 5 minute chart, I'll be
Mhm.
taking like maybe like a 0.6, 0.8%, right, to my TP1.
Of course,
You're
yeah.
talking about multi-percent, hardly anything in fees, right? Like, so you can manage the position a lot better.
Yeah, true. Uh, yes. So generally above 1. So I just check. If you check all my official calls, you can see
Mhm,
every TP1 is above 1 hour. Okay.
mhm.
The reason is, even if things just go to shit, you can manage the trade and close at break even.
Yeah.
Even if it drops below your entry,
Mhm.
if you secure like 30%, 25% of your position at above 1 hour, you can generally close the position uh, at break even. Okay.
And you could, if you wanted to, be more risk, even more risk averse, like myself. I suppose you could, even once you've taken that initial take profit, move your stop loss to your entry, right? So you've secured some profit.
Mhm.
And if you get stopped out down there, fair enough. You're just going to lose your fees, which on this would be incredibly minimal.
Yes.
Look at it.
So this one is I definitely do that when I'm scalping like NQ, or if I mean, when Bitcoin gets more volume. I
Mhm.
hope it gets really, it's getting very boring.
Mhm.
But yeah, so when I'm like doing NQ or trading crypto, generally Bitcoin, I definitely just trail my stop loss because I'm happy with that, like 1 minute trade that I get. I just don't want to make it complicated. I just want to take my money and just go to the next one.
Yeah, and also time as well, right? Like you can sit there in front of the chart for like 3-4 hours monitoring this, low
Yes.
time.
Yeah, when you are scalping, you have to manage it, like things like that as well. But the reason that I don't really like to do that in when I'm swing trading, okay, is that I mean, it can do this, come above, then do this, and then go up, and everything makes sense again. But you got stopped out
Mhm.
because you just moved your stop loss. On higher time frames, you really need to get it a little bit of room to run for your positions. That's based on my experience, right?
Yeah, no, I agree with that, and they're very different to kind of low time frame trading. I mean, look, we've got about 5-6 minutes left, Fraser, and there's a couple of really good questions in the chat. So we've got one here from Whack, And he's asking what the most effective time frame for this sort of method is. And I think framing that differently would be like, how low would you push this in terms of your, what do you prefer? And then how low would you push this type of range?
Yeah, first of all, it depends on the range. Okay. When you have a lot of data, okay, you can just zoom out and because and enjoy doing technical analysis on the daily. Okay. And there is I don't generally use 12-hour, but because I looked at the daily and I figured that I need more data, so I just went to 12-hour. Okay, but generally I don't like to go below 1 hour, or my favorite time frame for doing this ranges and the volume profile is 4 hour. And I don't really want to go lower on 1 hour, under 1 hour. Okay.
Nice. Yeah. Yeah. I think you get a lot of noise, especially in
I might share charts on like 30 minutes, 15 minutes, but that the range that I mark is generally on above 1 hour.
No, it makes sense. I used to really focus kind of on the 4-hour charts as well when I was looking to kind of go high. Otherwise, you can just take on too much noise. You get a lot of ranges inside other ranges, for example. And then I think we've already answered this one, but Erica came with a good question. Do you move your stop up after taking profits? So I think, Razy, you were saying when can you trail it on your lower time frames, but on the swing trades, you really like to kind of give them a little bit more room to breathe.
Yes, no, not really. After the first take profit, I need to see like a price action. A structure to be built. Then when I get a good low that I think the price cannot price would invalidate my trade. Okay, I just trail it. For example, if we get something like this, I happily just trail it somewhere around here. Okay, but yeah, what we were talking about was this level right here. Okay, I don't really trail it above this level. Yeah, unless I get a good structure. Yeah.
Awesome. So then we've got one here from Gio as well. So this is a good question, actually. Are you using daily and weekly volume profile sessions to analyze price action, or are you only doing it within a range?
So yeah, so generally what I like to do when I want to open up any chart is generally not this one, is this template that we built on a stream with the members.
Awesome.
Yeah, so I look at this, I see what I can have a better view of the market. For example, right here, okay, the reason that I looked at this price action, I mean on the daily, okay, and I'm not bullish, I'm not bearish yet, is that the volume profiles is telling me that this is the profile for the last week, right? This is the B-shape profile, and we're currently trading above the value area of this range. Okay, this is the value area.
So would you expect that then to kind of hold? Like if your theory is correct, then this should be kind of offering an area of support.
Yes, at 41.4. Yes, you see that we get actually there was some, yeah. So we get one great retest here, okay. But if it comes lower, yes, at around this level, I expect this is just like the line in the sand, right? If we get below this, I have to just get bearish. But for now, no, I'm fine with the pricing.
I think that's quite good for people that are looking to manage kind of portfolios of assets as well, right? So people that may be dollar cost averaging in, to understand that kind of volume, the kind of levels, like you said, the line in the sand level, where you can kind of look at that and say, okay, actually, if we come into this, I maybe need to really look at how we're holding here. If not, maybe I want to de-risk a little bit. I think that's a really, really good way to put that on. So look, we've got I think this is a good conclusion here, because we're just literally coming into our last minute. But Gio's saying, I think we need to arrange a range and volume profile education session with Raz soon. So let's absolutely get that going within the Nest, guys. And just to say, for anybody that maybe isn't a member or is interested in it at all, you can take free trials. You can come and get free membership by signing up through some of our links to different exchanges. And there's always loads of really cool deals and offers and bits and pieces coming on. We're over in Bucharest in March, so there'll be some really cool, exciting stuff to kind of pick up from then. Don't forget as well, if you haven't checked it out already, we've just launched the Inverse Prop Desk, which is a prop desk where you can just apply to show your skills and trade. You don't have to pay anything up front like the other prop desks are. And then basically, if you get through and you can prove yourself consistent, then you can draw a wage, you get a profit share of the prop desk as well. It's us kind of giving a little bit of something back to the community, and also to reward, a number of really good traders out there that don't maybe get the opportunity. People like Razun and myself, for example, were both headhunted by the Nest under a similar kind of scheme, right? And before that, we were just trading for ourselves, right? And it can really kind of change your outlook. So do look in the description if there's anything of interest from that today as well. Chris Burson, completely agree. It's been brilliant having Raz on as well and getting that kind of insight, something totally different to what I normally deliver. But I think, we've had a chat and we're going to look at doing this a little bit more moving forward. Maybe every few weeks or something we can jump on there together and really kind of give that a go. And Tammy as well. Sure. Well, you ping the bits and pieces across is actually out of my hands, I'm afraid, Tammy. We have Bast, Verb, and a few others who are managing that. But what I would say is just if you can show consistency over you've got a 3-month history of trading, you can show consistency in that, then you always have a chance, and you'll obviously have all the support of the TBN crew behind you as well, and access to all bits and pieces within our group from the indicators, etc. So before I waffle on too much, guys, it really has been a pleasure. Thank you so much for coming on, Raz. That has been absolutely awesome. Let's do another one in a couple of weeks. And really show that off. And by the way, for anybody else as well, those indicators, what you're seeing on the chart right now is something that Resume built with the members from the Nest as well. So you get access to that kind of genius, which is well beyond my level of ability. As Raz will tell you, I struggle to get to bridge assets and stuff. So I'm still a very simple creature. But Resume, thank you so much. Everybody else that was on the stream as well today, guys. You're very welcome, man. Let's do it again in a couple of weeks. And guys, if you have any questions on this, remember to get involved in the chats on the Nest. We've got a free public chat as well. You can come and get involved in, ask questions, have that. Eam as well, my brother, fantastic little trader. Raz, you really should check out Mr. Eam on Twitter as well. Got some really, really cool stuff going on. So, guys, thank you very much. Have a fantastic week. We'll be live trading again with members tomorrow afternoon. We're going to let FOMC get out of the way today. Do be careful because we do have the red folder news today, obviously. So do show a little bit of caution on that. And yeah, really look forward to being back with you all on Monday and Wednesday again for our live shows. I think we might even have the pleasure of having Libsy on the live show next Wednesday as well. And then I think the Wednesday after we'll get Resume back on again and look at some more stuff. But do have a fantastic week ahead, guys, and look forward to seeing you all around the Nest.